Good morning, Big Weir, roadtoruta.com with your morning Horn of Z's, your sip of coffee. Got up early this morning. Want to talk a little bit about silver because we're going to start hearing about silver very soon in the news. The suppression of silver has gone on for so long, and it's so embarrassing that the United States claims to be the land of the free, home of the brave, and yet we can't allow free markets to trade, or otherwise it would destroy the U.S. dollar, the unbacked fiat money. So we have rigged the price of silver and gold, but mainly silver. So looking at these charts, these are data going back since the early 70s when we went off a gold standard. It wasn't even a true gold standard. It was a pseudo gold standard. And if you look at silver over here on the left, we've got the price in 1980 when supposedly the Hunt brothers tried to corner the market. Now, according to pretty much all accounts, the Hunt brothers had right around 110 million ounces of physical silver and then about 90 million ounces of Comex contracts, futures contracts, long contracts. And according to the U.S. government, that constituted cornering the silver market. So the government went in, forced the liquidation of the Hunt brothers silver, driving the price from $48 that it briefly hit. I think it was intraday that it went up to like $48, $49, $50. And then it got slammed down, and within a couple months, it was back down at about $10. It was complete fraud. I mean, Hunt brothers can buy as much silver as they want. It wasn't. If you look at the quantities, 110 million ounces of physical. JP Morgan right now owns over 600 million ounces of physical, according to Deb Butler. So who is the price rigger? And why hasn't silver gone up like it did in 1980? As you can tell from the chart, anybody who bought in 1980 is still waiting for silver to be let loose from manipulation. But that's what happens over, 40 years of price manipulation. Yes, I've said it a million times. They can rig the price to zero if they want. It's a click of a mouse. And in order to do that, they would just shut down the Comex and say, okay, everybody pay up who's long on the Comex. And these are all Comex contracts, futures and options. And that's where the price of silver is actually priced. The LBMA is completely ridiculous, which I'll show you in a second. But as you can tell, here's the 2011 spike, and I've proven many times that was JP Morgan doing that. A guy named Bill Daley, who was Jamie Dimon's SWAT team leader, was put as Obama's right-hand man to rig the price of silver up and then slam it down to destroy sentiment in silver. That's exactly what they've done. Here's the, let's look at the 10-year price of silver, and you can see exactly, right in here is when Bill Daley was put as the chief of staff for Obama. Bill Daley, the Daley family from Chicago, yes, the same criminals. And then for the first few months, they just spiked the price. And that's even easier to do. And then they slammed it, and it's been held down ever since. Steve Mnuchin is using his computer programs right now to keep it around $17. So that's what silver investors have had to deal with. Now let's look at the supply-demand situation. As you can tell, silver is probably the most stable of all the commodities as far as mine production and even total supply. Look at this. I mean, it ranges, this goes back to 2007, the last 10 years. That's close to 900 million ounces, and we've basically gone up in 10 years to 1 billion ounces. Mine supplies right here going from about 667 million ounces to 885 million ounces. But consumption has gone up tremendously. And with all the ETFs, and there is no reason that silver should be rigged so low. There is no reason. And we're going to find out really soon why and how it was done. But first, I want to show you something really interesting right here. This is the U.S. Mint Silver Eagle sales by month. Now, these numbers are way below anything in the past. And the reason is, in January, this was the first number they posted, right around 5 million ounces. within the first couple weeks of January, and then something happened that just basically stopped the sale of Silver Eagles. According to Ted Butler, it was J.P. Morgan that was buying up all the Silver Eagles for the last 6 years. So right in here, J.P. Morgan stopped buying silver, and then the prices, or the quantities sold, plummeted to 1 million, 1.2 million, 1.6 million, under 1 million coins sold. I mean, it's going to be the worst year ever for American Eagles, at least since the mid 2000s, because these numbers were inching up on 50 million coins per year, and now it looks like they won't even do half of that. Although this is interesting right here. In May, the amount of Silver Eagles jumped from 835 in April to 2.3 million. Is that J.P. Morgan? I don't know. Truthfully, I have no idea. But it is a significant jump, and I would expect June to be even just as exciting. I don't know if it's exciting because the numbers are all skewed. Nobody knows even if these are the real numbers. So yeah, that's the Silver Eagle program is dying on the vine. But here's why. This is from the Comex, the CME group, the average daily volumes, and I have a calculator right here. We can calculate this out from. This is March. It was a very slow month. And you can look from right here, January, February, March. Only 1.6 million coins were sold, but that's the physical side, and the largest retail silver ounces sold is the U.S. Silver Eagle. So you look at right here. Now remember, Comex is futures and options contracts with a delivery component. So I'm going to do the math for you. In March 2017, silver futures 65,038 enter. And then options was 5,637 plus. That gives you 70,675 contracts. Now each contract is 5,000 ounces. 5, 1, 2, 3 times 353 million ounces traded hands electronic silver every single day, trading day in March. That's a lot, and that's an off month. So if there's 250 trading days in a year, 250 times, that is 88 billion, with a B, billion ounces of electronic silver. But that was a low month. March was a low month. Even in the low month, they trade 353 million ounces per day, every single day. And remember this, back here, supply and demand, they only mine in a full year 885 million. So how many, what is that? Every 3 days, all the mine supply for an entire year is sold on the Comex. Ridiculous. Completely ridiculous. So yeah, that's that's a slow month. On average, I think for 2016, on average it was 100 billion. That's what it came out to for the entire year. 100 billion ounces of silver sold back and forth, traded back and forth. I would say 99% of these trades are back and forth, from like Citibank to J.P. Morgan to Scotiabank. All the silver riggers just trading back and forth at the request and direction of the Exchange Stabilization Fund and Steve Mnuchin. This year, last year it was Jack Lew. Ridiculous. But just to prove that it's even more ridiculous, let's look at the LBMA, the London Bullion Market Association. This is supposed to be a physical market. Physical silver is supposed to trade hands every single day on the LBMA. They call them transfers too. They don't even call them trades. This is not a free market at all, and it even says it's not a free market. CME Group and Thomson Reuters operate the new LBMA silver price. CME Group, which is the Comex, provide the electronic auction platform on which the price is calculated, and Thomson Reuters are responsible for administration and governance of the LBMA silver price, which is successfully launched on August 15th. I think that's 2014. And it has fallen apart, and both of them are leaving because it's so hard to rig the price of physical silver. The LBMA are responsible for accrediting the price participants and also the intellectual property rights. So the CME Group and Thomson Reuters don't want to take any responsibility at all. Thomson Reuters is responsible for governance and oversight of the LBMA silver price. It is regulated by the FCA for its role as the benchmark administrator. Incredible. But here's what I want to show you. Here are the accredited price participants. So basically, these are the people who rig. Now, on the LBMA, they trade or transfer even more silver than the Comex. Because I'll tell you why. Because they come up with numbers in the 30 to 35 billion range per year, which is ridiculous that amount of silver would trade hands. But those are net transfers and not gross transfers. And net transfers are at least gross transfers are at least 3 times the net. But here are some of the participants. So these are the people participating in the rigging of the silver price. 7 price participants have been accredited to contribute to the LBMA silver price and are as follows. Now remember, this is supposed to be a physical silver market. As a matter of fact, it's the only physical silver market in the world. And just 7 participants are setting the price. Why can't they have a silver market where anybody can set the price? The next person who wants to buy silver. Why does it have to be set by these 7 people? Because they're all rigging the price. China Construction Bank is the new entrant. China's like, hey, if you're gonna rig the price of silver, we want to be involved. HSBC, Hong Kong Shanghai Bank, criminal organization. JP Morgan, we all know how criminal they are. Morgan Stanley, Bank of Nova Scotia, Scotia Makata, the Toronto Dominion Bank, and UBS. All long laundry list of criminal activity from all those banks. Insane. Just insane. But here's how weird it is. Let's go to the frequently asked questions. Now, this is supposed to be a market where you have people selling physical silver and people buying physical silver. When did the new LBMA silver price come into effect? August 15, 2014. So it only lasted, it hasn't even lasted 3 years yet. And the Thomson Reuters and the CME are bailing because it's a complete market rigging operation. But look at these questions. Did the LBMA silver price replace the current silver fixing, which was set by 3 members of the London Silver Fixing Company? Yes, this followed an extensive consultation with participants in the silver market conducted by the LBMA, CME, and Thomson Reuters. Conducted by the LBMA. CME and Thomson Reuters were selected by a market consensus to provide the solutions for the LBMA silver price and provide continuity of the benchmark. The market consensus was JP Morgan and the riggers telling the LBMA what to do. The London Silver Fixing Company's limited last day of operation was August 14th, followed which the silver fix was replaced by the LBMA silver price, screwing up all the derivative contracts, by the way, which all had to be changed. Why has the name changed from the London Silver Price? Unfortunately, the name was not able to be trademarked, and therefore, in order to protect the bullion market's IP and ensure recognition that is a daily silver spot price for the London bullion market, the name has been changed to the LBMA silver price. You know why they changed the name? Because it used to be called the London Silver Price Fix, and you can't have fixing in the name when you're really trying to fix the price and manipulate the price. Let's see. Here we go. Here's how the price of silver on a free market supposedly is set. On what basis is the LBMA silver price set? Now, remember, these are just people coming in with physical, supposed to be, coming in with physical silver and coming in with cash and meeting at a price. But here's the way they do it. It is an electronic auction-based solution, which is based on transactions and is auditable. The LBMA silver price is set in US dollars per troy ounce in a series of auction rounds, each lasting 30 seconds. The auction begins at 12 o'clock and participants are required to input their buy volume and sell volume. So they're not buying anything or selling anything. They're just telling the LBMA and the CME and Thomson Reuters they're proclaiming what was done in the back room. The initial price at the start of the process is likely to be close to the spot price. Well, why not just, what spot price? First of all, likely to be close to the spot price. The only other price out there is the CME's futures and options contracts. In the first round, the system algorithm will attempt to match buy and sell orders within the permitted tolerance level, 3 lakhas. If the buy and sell orders are out of tolerance, the auction price will change and the auction will restart until the buy and sell volumes are in tolerance and the equilibrium price is set. Why can't you just, hey, I have some silver. Hey, I have some cash. Here's the price of silver. They can't do that because the market's rigged. Unbelievable. It's just crazy. And here is the actual stats. Again, these are average daily volumes, huge volumes. So you times these by 12. And look where it's going. In 2016, look, they're all under 200 million ounces per day, but look at January, February, and March. All of a sudden, or December, January, February, March, all of a sudden it jumps from 157 to 218 million ounces per day, 207 million ounces per day, 171 million ounces per day, 203. Look, it is all trending up. Very interesting. And they're calling, see these transfers? They call them transfers, meaning we're transferring real physical silver. But these are average daily volumes. So let's run with 200. What is 200 million per day times 250 trading days? That is 50 billion ounces per year. Now, 50 billion ounces per year is ridiculous. And we just saw that the March for the Comex was, if you times that by the 250 trading days, you're getting up to 90, but the total is somewhere around 100 million ounces. So theoretically, the London Bullion Market Association, the LBMA, trades close to 50 million transfers 50 million ounces of physical silver every year. 50 billion ounces. 50 billion ounces according to this average daily volume right here. Okay? But these are net transfers. What is the gross transfer? I mean, this is netting, I bought 10 and I sold 5, so the net is 5. According to, right here, and this is in the Alchemist magazine, Peter Smith, who is the executive director at JP Morgan Chase, wrote this article trying to explain how understated the LBMA numbers are. And right over here, it says, it should be pointed out that as virtually all gold and silver wholesale traders net their trades for the same value date with each of their counterparties, the clearing statistics mask the actual underlying value of the daily local London OTC trading. In my opinion, the numbers are probably understated by as much as a factor of 3 times, or possibly even more during busy market periods. So 3 times 50 billion ounces, that's 150 billion ounces of silver are transferred every year or at least in 2016 or 2017, it will be at the LBMA. And remember, so that's 150 billion ounces, and the supply and demand, we're only mining about 885 million ounces per year. Insane volumes for an insane market, completely criminal. And that's what it takes to rig the price of silver every day, and they use computers and derivatives to do it, and I've proven it 100 times. That is your daily update, your morning Hortum Z's from Weir at roadtoruta.com. Make sure you subscribe to these videos. There's going to be a lot more good ones because we're going to get these guys on the run. We're going to take them down. We are taking down the silver criminals very soon. We'll talk to you later.